Dear guests, esteemed faculty members, and students who are present here, a very warm welcome to the Amity Global Leadership Studio Series 2023. Banking is going through a significant transformation, and to understand this change, we will do a deep dive into this matter with Mr. Balaji Viswanathan, an expert in both banking and technology. Let me introduce Balaji a bit. It is my pleasure to introduce Mr. Balaji Viswanathan, an industry veteran with over 27 years of experience in banking and finance. He has played a pivotal role in the development of two startup banks, HDFC and Yes Bank, and has held global leadership positions at MasterCard, demonstrating his expertise in retail banking, commercial banking, cards, risk management, and many more. With this extensive experience and deep understanding of the banking industry, Mr. Balaji is indeed a true thought leader in the field of BFSI. Today, he will share his insights on the topic of Banking 2.0, how digitization is reshaping the future of banking in India. Now, let me take a few moments to introduce our moderator for the day, Mr. R Balasubramanian. Bala is an experienced banking professional with over 2 decades of experience in various aspects of banking, including wholesale banking, financial institutions, and operations. He has worked in the capacity of Senior Vice President at HDFC Bank, where he successfully managed the role of business management and client relationship. He has been an academician and currently he is applying his knowledge in developing L&D solutions for the BFSI vertical at AITD. Mr. Balaji and Bala will be engaging in a one-on-one discussion. We will encourage all our participants here to share your questions in the chat box, and we will be taking up as many questions as we can towards the end of this session. And we hope you enjoy the discussion. With this, let's kickstart the session. Over to you, Bala.
Yeah, thanks, Tanvi, and good morning to all of you. What I want to do is I want to just set the context for this discussion. I think everyone knows very well that banking is undergoing a big transformation. Just to share, when I joined HDFC Bank in 1997, and when I was part of operations, there were more people in the most critical department called clearing. So you only could see headcounts in the clearing department. But when you step into the clearing operations of a bank, nowadays you see a huge machine, which is the check truncation system. So that's the big change which we have seen. And I would like to look at three big changes which are there, which are happening in the banking space. So one is the technology landscape, changing regulations, which are becoming even more stringent, and the intersectional competition. So there is no great competition between banks. It's the intersectional competition, the competition from a different industry, which probably was having some synergy. They are the big competitors now. And this is presenting both opportunity and challenges for the bank. And it is expected that these changes will now bring a big change in the way banking is experienced by the customer, the banking products, how that also changes. What's the role of a future banker? How a future banker's skill set will be like, and the very business model of a bank. What will be the revenue streams? What will be the growth drivers? How exactly the bank will continue to remain profitable? So these are some of the things which we want to discuss in today's talk. And it is generally felt, across literature, across studies, it is said that any bank which has both tech and data embedded in their overall scheme of things, those banks are going to survive. Those banks are going to navigate this transition. Balaji being a CEO of a technology company, and he also being a seasoned banker, we want him to share his insights, fundamentally, which are impacting the banks at three levels. At the customer level, how the customer experience will change, how the customer products will change. That's the first theme. The second theme is how will it change the employees and the employee profile of a bank, in terms of the nature of work which the employees will do, in terms of what exactly will be left out for the human resources, and which are the activities which will be taken up by the machine. And from a shareholder's perspective, so how will they look at a bank? How will the bank generate margin? What will be the profitability of a bank? So we want Balaji to look at these three aspects. Maybe next 40 minutes, we will touch upon these three for 15 minutes each. And to start with, first and foremost is, from the point of view of the customer, the image of a traditional bank is typically into current account, savings account, loans, payments, etc. But now that the bank is no more restricted to these things, the bank is actually becoming more and more synonymous to the entire e-commerce, ecosystem. With that perspective, the first question, just to trigger the discussion, with the change in technology, with the advent of AI, I want to request Balaji how he envisages banking from a customer's perspective going forward.
Thanks, Bala. Thank you so much to Amity Leadership Studio and to the Amity Educational Institutions for inviting me for the session. I'm glad to be part of the session and to share some of my learnings, and which hopefully should help the other fraternity who's trying to get into banking as a career, or technology for banking industry as a career. So I had spent close to 16 years in the banking industry, and then for the last little over 12 to 13 years with technology companies working for the banking customers. I would say that we are, if there is one industry which has actually seen significant amount of change induced by technology, and which has always been in the forefront of adopting new technologies. I'm talking primarily from banking technology in India. Banking industry has been always in the forefront. I still remember my early days. We used to always think of saying that no, before we implement a new technology, let's try and do something in parallel, try and do something in manually before we actually get to a scale. But nowadays, that's not the trend in the last at least 15-20 years, where people are looking at, even if it's the smallest of new products or new services to be introduced, technology comes first before the product gets launched or product gets implemented. Exactly. And if I were to look at it from a consumer perspective, I think the banks are undergoing a significant amount of change. Earlier it used to be a very high interest rate regime during our early days of banking. Then it moved into a slightly lower, close to the inflation level, interest rates, which actually shrunk one of the most perennial or lifeline of banks, in terms of incomes and profits. And to now, once again, back to, higher interest rates, higher interest rate regime, which is higher than the inflation level. So the net return is better. And if you were to look at, earlier banks were looked at only for loans and for deposits. And nowadays, banks is actually a marketplace. And, if I were to look at even a couple of weeks back, I was actually, spending some time with the Economic Times BFSI conclave, where some of the larger banks are actually coming together to create a marketplace for themselves, which is to, service the customers beyond just the banking services per se. So, the way people see banks is actually going to be significantly different than what people in our generation saw. And I'm already seeing that change with the next generation, my children, and also the people who are studying right now. You're not going to the banks anymore. You want the banks to come to you rather than you going to the bank to do the banking services. And I still remember some of the statements which I used to hear during our early days of banking. And we used to have visionary leaders in HDFC Bank, who talked about how technology will transform. And I still remember some of those words. Banking have to be only felt, not seen. And technology also is something very similar, has to be felt, not seen per se. And that's the direction in which we have seen in the last 2-3 decades how the services have evolved. You don't want the customers to feel disrupted. They don't need to visit. They don't need to go and take a service. It has to happen seamlessly. And that's the way the services are being positioned right now by banks. Of course, there are still different stages of evolution. Different banks are doing it in different ways. If I were to look at payments as a cornerstone, that's probably India is actually a pioneer, and probably we've done the maximum in that particular space. Yeah. But if you were to look at the typical commercial banking engagements or investment banking and other kind of services which are to the niche, to the top end customers, who it's not a day-to-day one, the Western banks are probably far more advanced compared to where we are. Whether it is in risk management, whether it's in the question of how these services are being positioned, how transactions are executed in the higher end commercial banking ones. Probably that's where we are maturing ourselves, while the Western banks are actually far ahead in terms of where we are. The entire movement towards paperless engagement, paperless interaction, the way personalization is redefined, because earlier personalization or KYC, as what we all know of during our earlier days, know your customer is only from paper, whether you've given your identity proof, address proof, and that's it. Beyond that, there isn't really anything else in terms of KYC. But now KYC means you need to know your customer deep, in terms of what his interests are, what stage of life he is in, what kind of products he will actually consume. That's what the trend has been. During pandemic, that's when the interest rate regime changed. That's when the banks started going back to the traditional route, where the net interest margins are slightly higher now. Banks have made record profits in the last couple of years, primarily because of the higher interest rate regime. But now they are trying to find the equilibrium between the two. How do we make sure that you provide services which will help you in running your cash registers, not just from interest, but from the other incomes and other services that you offer, but at the same time also leverage on the risk management and the consumer protection that you need to do. Because the biggest challenge with most of these personalization or the scary part of many of these analytics or data is that there is very little regulation or protection at this particular point of time. And all of us know how many calls we get on a day-to-day basis. Even when you are trekking in the Himalayas, you will still get a call from ICICI Bank or from HDFC Bank for taking a personal loan. There is really no data protection per se, and that's something which is a scary part. How do you protect your personal information? How do you make sure the personalization is limited to what the banks will be able to do? Because the way the technology is evolving, the way the so-called open banking is coming into play, with the number of APIs, the number of interfaces that banks have been able to build with other third parties, the same level of security or the same level of sensitivity around the customer's data is not there when you actually interact with so many other third parties as well. So that's where some of these information is not being used in the most appropriate way. So that's going to be another big challenge from a consumer perspective. While the services could be seamless, at the same time, you don't want your data to be used and misused everywhere. That's a bigger angle that's going to come up from a consumer perspective. OpenAI or generative AI, as what we call it as nowadays, is redefining technology in a very, very different way. So earlier, the number of times or the amount of time that we used to spend to generate a code or test a code has significantly shrunk. But of course, it's still a long way to go. But at least in the initial days, we can certainly see that the standard API testing or the standard API configuration and other stuff is something which the OpenAI can or generative AI can do it on its own. Just give that command and it will probably give you the information. But at the same time, the risk involved in doing many of these in open forums, poses that risk as well. So it's going to be an interesting next 2 to 3 years on how generative AI is going to transform the technology adoption. And at the same time, how the regulators and the governments are going to come back with, what kind of regulations are they going to come back with? Well, there are data protection acts. Unfortunately, with OpenAI, many of those data protection acts will have to really undergo, rethinking as well. And if I were to look at my own experience of being in a technology company supporting banks, I would say that 2014, 2015 periods, all they used to, when we talk about digitization, it used to be whatever you do in the physical world will get digitized. Whether it is booking a deposit or doing a funds transfer or changing of your address. Whatever you could do physically is what used to get transformed into the digital world. Yeah. But thanks to the pandemic and the reimagining of the digital world, it's now digital first. So people are looking at what you can do digitally rather than trying and mimicking what you have in the physical world. And that is going to be the biggest change which you would probably see, which has already started, and that's what you would probably see in the next couple of years as well, in terms of how you could bring it digital first rather than trying and only mimicking what you have in the physical world. I would say that these are probably the 3 or 4 biggest trends, at least from an Indian banking industry. The global industry actually has different challenges. The banking technology in the global world, most of the global worlds were not around what we used to call in India as core banking, or a single system where it could actually do a repository of all the customer information and transaction information. And that's where we are moving from that into a larger single database and single view of customers and other pieces. While in the Western world, it always used to be the large monolith systems, and it's the cost of transforming those systems are much higher. People are actually building in between layers to try and harness the information available from each channel. So the legacy modernization is what we call it as in the technology world, is going to be a really big part, in the Western world in the next 3 to 5 years time, for them to make sure that they are able to, get all the benefits of generative AI, big data analytics, and knowing the customers and hyper personalization as well. So I would say that this is what I see as where one of the changes, and also what we see as a trend which is likely to go forward. Nowadays, there is no point in predicting 10 years and 15 years. The things changes every 2 to 3 years kind of a time frame. So whatever timeline that you're looking at, it's going to be, 3 years is probably the maximum window that you can actually visualize. Anything beyond that, you really don't know what else is going to come and make a big change in front of you.
Okay. So talking about hyper personalization, see, as of now, the extent to which we are experiencing that is outside the banking domain. So let's say that I do a search on buying a t-shirt or a trouser or a shoes, and immediately you start getting the kind of relevant ads in that screen. But then that's something which is in the hands of the search engine company. So now, how will the banks do this kind of a hyper personalization, that what I am thinking and what I am searching, and then the bank gets in at that stage? Is that feasible? Is that possible? And kind of related question is, what according to you, I mean, if you can share one experience of a hyper personalization, for the banking customer.
See, the search engine optimization, or trying and looking at what you search for in your day-to-day stuff, it's more a consumer-driven driven, buying pattern per se. Banks, you basically consume a service rather than buying a service more often than not. So while it is relevant to some extent, it may not be 100%, what you're searching for in an Amazon or what you're searching for in a Google is going to be very relevant for a bank per se. But based on that particular search, how do you figure out what you can position to your customer? Do you need a consumer loan? If I search for something and Make My Trip, can I actually give them a personal loan, a credit card or any of those kind of stuff is going to be relevant. And as of now, it may not be really online real time, but most of the banks are utilizing those services of trying and looking at, you may not see that, no, I go and search and Make My Trip and suddenly, a bank comes and tells me saying that you need a personal loan, but you will actually see it next day or 2 days later, because there is already a transfer of information or this particular data or buying of this particular data, which is already happening, within the banking industry as well. But what I would say is, hyper-personalization in the banking industry is primarily around, so the banks know that I am so-and-so. This is my age profile. This is the kind of, stage of career which I'm in, what kind of spending patterns that I have. And based on that, how do I position, any other lifestyle product? Whether it's buying of a house, investing in a portfolio, giving me a private equity or a crowdfunding kind of an engagement. Those are the ones which the banks are trying to do. That is more relevant, for the banks, and also to make sure that whichever payment gateways or whichever engagements that they have with the other consumer companies, trying and looking at how their customer data is being used in that particular fashion as well. If you ask me whether it is being leveraged fully, it is not, because once again, there are so many disparate systems. I can say my own experience itself that, if you ask me whether my bank knows me very well, may not be, because, I probably have 4 credit cards. I have, 2 home loans, but it's not from the same bank. So, and all those transactions anyway happen in my account. So if somebody were to, do that analysis and probably position something to you, it could be done even otherwise. But obviously, each one of the banks are in different stages of their, progression. And whether we like it or not, the competition that you see in the banking industry is limited to a certain set of people. There isn't really too much of competition beyond that, because it's only targeting a certain set of people once again. The public sector banks still rule the roost, because they have more than 70% of the population actually banks with the public sector banks at this particular point in time. So there is still a long way to go from an hyper-personalization, but that is where that's where the money is going to be. The interest rate regime is right now higher, but it may not continue the same way going forward, and it's a cycle. And if you were to look at how the banks will generate incomes and also compete with some of the fintechs. The fintechs are flushed with cash. Their cost of capital is much lower than what the banks actually will have to incur, and they're not really worried about the profits. As you could see, most of the fintechs at this particular point in time are running losses, but it's around against the market share. So, in this hyper-competitive market, you need to actually start rethinking on how you will engage your customer, how you will keep your customer captive. And some of the regulations that the regulator are bringing in, whether it's account aggregation, making it, as we all know, the moment you get into a bank, the exit barriers are very high. Because you sign up for your bill pay, you sign up for your credit card, you sign up for your home loan repayment and other stuff, and you want to exit out from each one of this, it could actually become a very painful process. Some of them are simplifying it, but it could be really a painful process. But with some of the changes which the regulator is likely to bring in over the next 12, 18, 24 months kind of a time frame, many of these could actually get far more easier, which means that the competition is going to be even more intense in the industry as well.
Okay. So you mean to say that it can even it can get on to a level of account number portability. So whatever features you had with XYZ bank, the same features and the same things can get moved on to ABC Bank also. I mean, going forward, that's a possibility.
That's right. That's right.
Okay.
And many of these exit challenges are probably what you would see here in this part of the world. As you go into some of the even though the banking is not so matured, some of these services are far more easier to do if you go into the Western world.
Okay. Okay. Interesting. So now, from a customer's perspective, now I want to get into the employee's perspective. So typically till now we have seen banks are actually considered to be large generator of jobs, because it's a service industry and there are specialized roles. So till now we had very specialized department like credit and market risk, audit and compliance, HR, technology, so very specialized department. So till now we have seen that some routine transactions etc. got automated. So that's fine. But now what we are seeing is even specialized role which requires decision making, a credit manager in personal loans department, even those kind of job profiles are taken over by AI, because there is a model available, there is a model of credit assessment which is available. So we are looking at a situation where even specialized roles are being taken by machine. So with these changes, as per you, what are the roles which will be left out for human resources, and what are the roles eventually which will be taken up by AI and by machine?
See, Bala, if you were to look at our history of what we have seen, and as the technologies started getting started maturing over the last 2 decades or so, automation has been a constant one. As we could see, whether it's the RPA tools or whether it's your own Excel macro-based automations, all of these challenges have always been there. It's not something which has come only now with AI per se, but maybe even more pronounced with AI now, because some of the things which we never thought could get automated are also likely to get automated or getting automated as we speak at this particular point of time. But you can never replace human intelligence or the empathy or the association with, because when you're dealing with people's money, particularly in a bank, there is amount of risk management that you need to do. There is an amount of empathy that you need to have. All those are not going to get replaced by any machine, at least in the near future. It may get replaced maybe 5 years down the line, 10 years down the line, but it's not going to get replaced in the near foreseeable future per se. Many of the routine tasks will get automated, but the branch will require a certain set of people to be there. Your back office will require a certain set of people to be available. It may not be the same ratio at what we used to have earlier, but still, there will be some people who will actually have to be there to do the risk management. Because when we're saying some of these credit decisionings are getting automated, the credit decisions are getting automated based on some usage pattern or based on some analysis of the past, and to actually elucidate what actually was the pattern and what was done in the past is something which somebody will have to feed into that. So once again, I remember one of those other quotable quotes where one of my bosses used to say that it can be intel inside, but if there is an idiot outside, the intel can't do anything. You need to have that intelligence which will have to come from human beings. So it will probably be a more intellectually, mentally challenging roles which will still be there. The regular ones, the regular mundane data entry, or the processes of identifying based on some set patterns to say that up to 50,000 rupees somebody else can do it, or 100,000 rupees somebody can do it, or depending upon what your profile is, the bank is ready to take the risk. And that particular ready to take the risk is once again another risk management analysis which somebody in the bank will have to do. So I would say that, you may not require thousands of jobs, but you will still have people who will have to do this thinking, who will have to do that analysis, who will have to make sure that the pattern is captured. And as we evolve, as our younger generation evolves, each city, each town, each mohalla, each school, each college has a different pattern nowadays. So how do you make sure that you understand each one of those patterns? How do you make sure what the outliers are? How do you make sure that you define your automation based on those particular patterns? Is going to be an intellectually challenging job as well.
Okay. So, which essentially means that if we had, let's say, a particular bank had 100,000 personal loan, customers, they used to have, let's say, 50 to 100 credit managers. So, a file is prepared and then, brought to him, and then he asks his subordinate, "Acha, sab kuch dekh liya, you have seen all," and then he signs on that proposal. So there were 50 to 100 such credit managers. So now, means what you are saying essentially is somebody who is only going to assess the model risk. He is only going to fine tune the model over a period of time. He will keep monitoring the model, whether all the independent variables or all the parameters are considered, and he keeps fine tuning. So it will surely not be the same 100 credit managers. It will be a few guys who also have an understanding of model risk and such things. Is that understanding correct? I mean,
no, it'll be a combination. Bala. One is that the banks are not going to be satisfied with just 100,000 loans anymore.
Yeah.
You need to have a larger market share, and you have a larger population which they need to cater to as well. And I'm sure some of us who are tracking these RBI, statistics and other stuff, our deposit rates are actually the lowest in the last 53, 54 years. So people are moving more towards living off the loans similar to the Western world than the typical savings mentality as what we used to have. So which means that the demand for loans is going to be higher. So how do you figure out which market you need to tap into, where you need to go and sell? So that population will increase. The population which is actually sitting in office and probably trying and doing only the modeling or only signing the paper, that team will probably have to rethink of what they need to do. And the other one, as early as last week, we saw, how RBI changed the weightage for, some of the consumer credit risks, because that's considered to be the next, hot air balloon. And, how do you make sure that you're ready for, catering to all those kind of changes which the regulator is going to bring in, or the statutory authorities are going to bring in. The amount of consumer protection challenges that you're seeing right now with banks is phenomenal, whether it's through ombudsman or whether it's through the consumer protection courts or agencies, because the consumer awareness is increasing. So you need to have somebody to look at that particular element as well. In my opinion, net, you may probably be able to cater to, for the number of workforce that you had to cater to 100,000 customers, you may probably be able to cater to 150,000 customers. So you'll probably have a 50% improvement in productivity, but it's not going to be that, you can do the 100,000 with 50 people, and now you can do 10 million with 50 people. Okay. That's of course my personal, I'm actually coming to this particular conclusion based on what we have seen in the last 20-25 years, because the amount of automation that has actually happened, and also the inefficiencies that automation brings in as well. So because you automate what you currently have, and the current one is certainly not the most efficient one. So you're automating already an inefficient process, which means that it's going to take even more time for you to cater to changes, to adapt to the new requirements. And the regulators keep changing, customers keep changing. So I don't really see a big job loss scenario. But it'll probably be more mentally engaging jobs rather than just mundane looking at the paper and doing the manual calculators.
Okay.
So that's where we need to reskill ourselves.
So any thoughts on the reskilling part? I mean, what are the specific skill sets on which the reskilling should happen? I mean, your quick thoughts on that?
Yeah, once again, the gray hair actually forces me to say this. When we started off the careers, knowing Excel itself was actually a big thing. Nobody expected you to know even Excel at that particular point of time. That was 25, 26 years back.
Yeah.
But now Excel is actually a given. And typically, the general thought was that bankers don't need to know so much of technology per se. But nowadays, with the kind of changes that you are seeing and the kind of customer demands that you are seeing, it's very important because I'm sure we all used to have in the bank a cheat sheet in front of us to say the fast path, and there used to be some 10, 12 fast paths that you need to actually for you to deal with the normal mundane transactions. You need to just look at that and go ahead and complete your day with just the 10, 12 fast paths per se. But gone are those days. Nowadays, you need to be absolutely, flexible. You should be able to write your own macros. You should be able to write your own data analysis through, whether it's through the Excels or through other database query tools. I come from a completely finance background, didn't have anything to do with technology, but all the technology that I learned was actually in the bank. Right from writing SQL queries to coding to everything else. It's like the kind of skills that you need to know from a technology perspective is significant. What are the technologies that are available? What all the technology can do? Because that's something which you would see, when you go to a bank now. God forbid you don't need to go to a bank, but if at all you happen to go to a bank, that's what we were talking about it. You don't really have the experience that your requests or your queries doesn't get fulfilled in one shot. More often than not, you need to go back or you need to call somebody else. Being from the banking industry and considering that you are still banking with the same banks, you still know people, so you call, get done. But otherwise, for a layman to go to a bank and get things done is not very easy, and that shows the lack of skills, the kind of variety that you need to know, and how do you make sure that you're able to, have those data available on your fingertips. How do you query search? How do you figure out, the data or the queries, questions, clarifications are available in a simple layman knowledge. Otherwise, people will throw jargons at you, and you don't know what those means as well. So that is where I think this reskilling will have to happen. One is from the consumer side, understanding the consumer and empathy of that, and the other one is usage of technology at all levels. How do you adapt to the new technologies, and how do you make sure that you're able to use the technology in the front office or in any of the other query clarification departments as well.
Okay. So even in the front office, a typical branch setup, you are saying that the basic minimum skill set of a front office personal banker, relationship manager, branch manager, their skill sets have to undergo a change, and they need to know more technology.
More than anything else, how do you access the information? Technology knowledge is to primarily make sure that they are able to access the information correctly and able to clarify and provide the support that is required. Because nowadays, earlier, 20 years back, people used to go to the bank for everything. Right from statement request to anything. But nowadays, the people who are going to the branch go for only, specific, very niche queries or clarifications. And, if you don't know how to get that information, and it's all available in the system somewhere or other, how do you make sure that you're able to know how to access it and how to get that information? How do you clarify it? Something which it's going to be more specialized than just a generic customer service job.
Okay, got it. So then coming to the third topic, looking at banks from a shareholder's perspective. So traditionally, banks across the globe, we are now seeing that they are at a turning point actually, because banking is not all that, if I can say, banking is not all that exotic, the traditional banking. And since their profitability and their entire business model is being questioned, especially the traditional banks, their valuations are also seeing some strain. So we are obviously the FANG, they are into banking in some way or the other, and looking at all these kind of developments, what will be, how to look at the business model of a bank? What will be the revenue drivers of a bank going forward, so that they continue to maintain their margins? Because as of now, they are obsessed with CASA, they are obsessed with high interest rate loans to somehow get that NIM, the net interest margin. But going forward, what are the drivers and how do you see this evolving?
The way, I'm a shareholder of at least 3 different banks at this particular point of time. I can say that, I'm very happy with the way the banks have been able to manage their profitability.
Okay.
If you look at the challenges that was there earlier when the net interest margin was under stress, when the spread was hard in India. At least we are still used to the 3%, 4% kind of a spread, while in many of the Western countries the spread used to be hardly a 1.5%, 2%, kind of spreads. And how people have actually been able to identify alternate, fee and income channels, whether it's through investment banking or whether it's through deployment or through bonds or any of those kind of. And now with the last 18 to 24 months, when since the Fed started raising the interest rates, and gone are the days of zero interest rate or negative interest rate, which you used to see earlier, whether it's in Japan or in Europe. The traditional banking is it's coming back to almost similar to what it used to be 2 decades back, because the banks are seeing the net interest margins grow, but obviously it's putting strain on businesses which are actually doing banking with them, because they are seeing higher interest rates, cost of capital going up, which is also important for the economy. If you look at the banks, their primary role, while some part of it is to generate profits, but there is also a much larger societal role which the banks play as well, in terms of getting funds accessible, to people who don't have access to the funds per se. And that is what is supposed to be fueling the economy. While some part of it is getting lost in translation, but there are still some of the traditional banks which fulfill that particular requirement. And typically, if you were to look at the kind of profits that are being made, it is the last 18 to 24 months, they've seen record profits because of the interest rates. But people have been able to figure out how to get to that particular stage. So whether it's by reduction of cost to income ratio, which is one of the biggest elements for anybody to measure a bank and their efficiency. It used to be in the range of around 59% in early 2010, 2011 period. But now it is the global average is at around 51%. So that means that there is always almost an 8% or a 20% improvement in productivity or efficiency. Which they're talking about. And some of the banks have actually been so efficient that they are close to the 45%, 40% mark per se. So the cost income ratio is certainly another option for getting maximize their profits and the returns. And the other one is the efficient credit management. How do you make sure that you are able to manage your write-offs? How do you make sure that you lend the right way? So that you don't have unnecessary pressures. At least the private sector banks can do it. Public sector banks have some other compulsions which they may not be able to do it fully, but at least the private sector banks are able to do it reasonably well. So gone are the days where the banks see only interest as their only source of revenue. Now it's still almost 65 to 70% of the revenues come through the interest margin, but that particular gap of the non-fee or the non-interest income is actually is still growing. And,
Okay.
I'm sure at some point of time they will find the right equilibrium between the two.
Okay. So that's interesting. I think there are a few questions which
I have one of my gurus asking for a question as well.
Yeah. One of our gurus asking the question.
I don't know whether he's making fun of me or whether he's asking the question really.
So I think broadly we are done with the three broad themes. I think it's time. It's 11:45. We can start taking questions. I have a few questions from our set of trainers, which I'll take subsequently. I think let's first address the question of our guru. With so much of digitization, usage of technology, AI, do you feel we would have less expertise or banking domain knowledge personals going forward? Does it also mean the technocrats need to understand banking more, as they would need to develop more solutions? Unless the banks invest in human asset training on banking extensively, this will be an issue. So he's putting it the other way around. I mean, Bindu has rightly put it the other way around, that do technocrats also need to understand banking? And and a sweeping statement, do we mean to say that we need less expertise in banking domain, which essentially means that, courses like CA, IIB. So I will make a very kind of a radical question, is it required? So I think the question is more on that front, Balaji.
I would, I think Bindu knows the answer himself, but he is asking the question still. But I would say that, we need more expertise rather than less expertise. Okay. And the variety of challenges or variety of questions that actually now that comes to a banker is very different than what it used to be earlier. It's not gone are those days where people will just come and ask you, what is your savings bank interest rate and how frequently does it get paid, and those kind of questions, to people coming and asking you, saying that, what is your TCS limit, and how do I account for the TCS when I have to do my income tax returns, and very high-end questions than what it used to be. So the expertise have to be higher.
Okay.
The only thing is that some of these questions can be, if you have, if you capture the kind of questions, or if you capture the kind of, clarifications that you normally get, or you actually start thinking about yourself in customer shoes, because that is one of the pieces which I have seen with at least, this renaissance banking, so to say, where we are in the cusp of, the old generation and the new generation. We, thinking on the customer's shoes is something which is missing. You think of yourself as a banker, and you think that the person who's sitting in front of you knows at least, 70% of what you know, or 80% of what you know. And that is something which will have to, that's where the expertise will have to come in. You need to think that the other person is probably a class 5 or a class 6 student, and try and explain to them in that way, rather than trying and thinking that that guy is also another banker, he will know, or that guy also is another well-educated finance knowing person. So that's something which is going to be an important element. We need probably more expertise, more empathy, more patience, and technocrats to know banking is a must. Yes, Bindu, I completely agree with you. The employees are not learning banking, and the banks are not, seeing with the kind of employee turnovers which most of the private banks are seeing at this particular point of time. The banks are not able to invest time and effort, or I would say not able to. Not able to is not the right word. Probably not doing enough to train and engage people as well. For example, if I were to tell you, for companies like ours, we are a technology company focused on banking, but we take from anywhere between 60 to 120 days before we actually ask the person to start working on a particular project.
Okay.
Because that's the kind of the variety that we need to teach. The teams are actually much lesser compared to what a bank will have to do. But I see in banks where people join and day 3 they are there in front of the customer. That is something which both the banks will have to invest, and the people who are joining the banks needs to have the interest and passion to learn as well. Banking, for some reason or other, has been probably branded as something which is not a big deal kind of stuff, but it's a very high intense, very highly sensitive, customer focused industry, and it requires a lot more empathy, skill, understanding than what you could probably do in a technology business.
Okay, got it.
I don't know whether we managed to answer.
No, I think quite a few areas have been touched upon. I think there is one more question from L&D head of HDFC Bank, Mr. Rakesh Nanda. He also happens to be our advisor. So he's saying that with so much of automation and digitization in banks, what are your views on the dilution of the analytical ability of human resources in taking effective decisions in favor of a bank? Or you feel we should head towards a new human intervention branches based on strong database? So yeah, so extreme, two ends of a spectrum. So he has presented.
See, it will cater to different set of customers. So if I were to go, to the Gen Z or people who are born after the 2004, 2005 range, who are in the mid-teens, they would be happy with probably a pure machine-based engagement, so to say, because they are all the Insta world right now.
Exactly.
But if I were to look at, they are going to become baby boomers, or they are going to start making money or contributing to the economy, maybe another 8 years, 10 years down the line. The guys who are actually contributing to the economy at this particular point of time needs both in between. And like what I mentioned, it's once again my personal take, having been a banker for close to 2 decades. Banking requires a lot more. See, there is one part which is primarily payments and fulfilling payments, which can be completely automated. You don't require any intervention at all, except for probably managing exceptions. But there is a lot more which the customers would actually expect, from a bank. Right from going through difficult phases of your life to, where you need support, both, financially and emotionally. In those cases, the human interface is going to be very important. There is one study, if we were to look at McKinsey's, this beginning of the year when McKinsey has published their, banking transformation, or the transition phase is what they call it as. Talking about whether the branches are going to become more prominent again, from what it used to be earlier. So I would say that it will require both. But it will probably cater to different set of customers.
Different set. Got it. Okay. And one question which was there, we have talked about banks moving from a pure traditional bank, current account, savings account, to be there as a part of the entire e-commerce ecosystem. So does it mean that, banks necessarily need to own certain e-commerce platforms to get more data, to get more understanding of their customers, and also to cater to such needs of the customer? So should banking expand from what it is right now?
It will actually. It is, like what I said, it is going to become a marketplace. But when I say marketplace, it's not that banks are going to sell T-shirts and groceries. That's not.
If they have such a platform, is it desirable or otherwise?
More often than not, they will have a platform which will partner with somebody rather than they doing it themselves. I would say the financial products, or closer to the financial products, is what the bank will probably try to sell through their marketplace. And it's an open banking world, it's an open API world, and everybody can do anything and everything through the banks. And if your money is actually kept in the bank and not in any of these wallets, because nowadays wallets have anyway become not so valuable anymore. I wouldn't say defunct in totally, but it's not so valuable anymore with all the latest PPA rules, and with UPI coming into play. There isn't really any value in keeping money in some other wallet where it's not even interest bearing, and you don't really have too much of transparency in that particular system as well. Banks can actually see what the customers are buying, what the customers are doing.
Okay.
Every other set of information, whether you're buying it from Amazon, what amount you're buying it from, whether you're on, if you have an interface or if you have a partnership with any of these e-commerce world, they can also give you additional information as part of that particular message itself, in terms of whether you're a Prime customer or whether you're a Myntra customer or whatever information that is required. So, in my opinion, I don't think there is any money available there in that particular piece, because, as you know, most of the e-commerce companies are not making any money. They're only looking at it from a market share perspective at this particular point of time. But for banks, the information or the value is actually out of the data and the buying pattern, and what's the kind of positioning that the banks can actually do to those customers based on their usage patterns, which they should be able to do even with just the partnerships in the API world, which they can engage with many of these partners.
Okay, got it. And one more question. I think I'll just rephrase that question. This is more to do with one end we have the hyper personalization bit, and on the other end there is this data privacy thing also. So what is the middle path here? How will a bank navigate this tightrope between hyper personalization and data privacy? To what extent banks will go? To what extent the regulation will prohibit them to go beyond a level of personalization? So how do you look at this entire piece, this conundrum, if we have to say?
See, data, the data that the banks have, or at least the richness of data that the banks have about you as a person, the exchange of information as part of a transaction is one part of it. But the information that they have about you as an individual is far more than what probably anybody else can have. That's something which, by default, by way of your relationship and the deepness of your relationship, you would have far more information. And the information that you're getting in through APIs or through any of these exchanges are only value-added information about what kind of transactions or what exactly is the buying pattern or any of those kind of stuff. And as far as how the bank is using that particular information is something which will largely depend on whom they are signing up with as part of their open API framework or open banking framework, what information they are sharing with that particular partner or agency or anybody else. And in that process, if the banks are either sharing information which is not required for the particular transaction or anything else, that's where all the sensitivity comes into play. And the other one is on how well you're able to protect your information, because when somebody have an access to your API hub, they also have access to your internal system if you don't have the right level of security and protocols and the information that you could actually see as well. And how many APIs you're able to do for one particular customer, whether it's buying, whether it's selling, whether it's inquiry, all those. The amount of security and the governance that you need to have is going to be of paramount importance. While the regulator will bring in some part of it, but ethically how you do it is going to be more crucial than just the regulation per se. Because regulators will probably come and do some sampling, some if there is a problem, it'll get probably blown up. But
Yeah.
at that particular point of time, the reputational risk that you have already gone through is far more damaging than what you could have done as part of the prevention. So it's going to be extremely important because particularly in a country like ours, where we've just come up with our DPI, policy, unlike what you have in UK or in Europe with the GDPRs and those kind of regulations.
Okay.
So even there, by default, you're only passing on the problem to the customer rather than protecting the information, so to say. Because if you go to any other sites now, it says cookie settings, and more often than not, at least 95% of the customers will just say accept all, because you don't have the time to go through each one of those and disable which cookies you don't want. And so it's a question of how ethically you're able to do it, because you can always say that the customers accepted it, so what are the big deal? But it's the moral dilemma and ethical dilemma which is going to be far more pronounced than just the regulation per se.
Okay. Yeah, since it's a dilemma, I think there are no clear answers. I think everyone has to draw a line for
absolutely
themselves. Yeah,
that's what we call it as responsible banking. So
great. So I think the time is up. But then I think the many points which you have raised, I think it calls for
you could send me the stuff. I can probably try and answer whatever I could.
Yeah,
we can have another follow-up session later.
Yeah, we can have some follow-up sessions, and maybe in certain different formats, maybe a set of similar profile people we can bring together and we can have similar discussions.
I saw the first question was from Mr. Das, who said that, do you have a presentation for this? Yeah. Unfortunately, we couldn't really figure out what kind of presentation we need to make for this free-flowing conversation.
Yeah.
But I can certainly share with you, any links or information that I use for this.
Sure. I think Mr. Das is one of our trainers. He's an ex-SBI, banker. So,
okay.
So surely, so we will also look at that. I mean, since this is the first of this season, I think we'll incorporate all these things. Thanks, Balaji. Thanks a lot for this interesting discussion. Tanvi, you can give the closing remarks.
Yes, thank you. And thank you, Mr. Bala, both of you for taking us through such an insightful journey. And ladies and gentlemen, all present here, this concludes our leadership studio on the topic of Banking 2.0, how digitization is reshaping the future of banking in India. We would like to extend our sincere gratitude to Mr. Balaji, an amazing speaker, for sharing your insights on the topic. And I'm sure all the questions that you have, we'll be making sure to share it with Balaji, and he'll be more than glad to answer as many as possible. As a token of appreciation for you, we would like to present a virtual certificate from AITD. And this is a small token of appreciation, and we hope all our participants enjoyed this studio and found it informative as much as we did. We will continue exploring the different aspects of this exciting world of finance and technology, and thank you for joining us. Thank you so much.
Thank you. Thank you so much. Thanks, Tanvi. Thanks, Bala. Thank you so much. And thanks to Amity.
Yeah, thanks a lot.
Thank you.
Thanks. Bye.
Bye.